But first, spotlight on the economy this Monday. India's second quarter GDP numbers beat estimates, growing 4.8% on the back of strong performance by the agriculture sector. But it was still the fourth straight quarter of sub 5% growth. So what does the minor pickup in growth indicate for the road ahead? And will the measures taken by the government help the economy to return to an 8% growth trajectory in 2014? Harsha Subramaniam spoke to some of India's top corporates and economists to find out the answer. Here's a slice of that exclusive conversation.
Oh yes, not only a possibility, but it's likely. That's provided we do the right things.
And what are those right things?
I think the most important one is to get the GST implemented soon. That itself will add 2 percentage points to our GDP growth, other things being equal. And in any case, I think in the second half of this year, with the good agricultural season, I think GDP growth will accelerate a little bit. So that's very important. The other most important thing is the ease of doing business in India, which was always rather poor, has further deteriorated. Now, I don't want to go into every little area of where it has deteriorated, but if a new government can sort that out, and I'm sure a new government can, because a new government will have the mandate and it will be able to do it, then that could further add to it. So 8% is not difficult. Whether it will happen or not will depend on how strong the new government is. If it's a strong government, a pro-business government, a pro-economy government, I think it's quite likely.
Mr. Godrej believes that it is possible, but is 8% a distant dream, or do you think we're headed towards back to the Hindu rate of growth?
If the question is for 2014, I think it's very challenging. I don't think 2014 we are going to see 8% growth. Yes, after the elections, if we see a pro-development government, and if there are 3 or 4 things which are done by that government, possibly over a period of time we might achieve 8% growth. And I think I'm talking about more macro things. Very important is the fiscal deficit has to be controlled. There is no question. I think we are also today facing this problem of inflation. And I think there is a very limited choice as far as the government is concerned, unless the supply side. That's what the finance minister said the other day. And he said that there are limitations on that. So in an environment where interest rates are going to be high, it's also going to be very challenging. There are 2 other important things which are required. One is we need substantial investment in infrastructure, and unfortunately today it is extremely challenging. Government is talking about 50% of that investment coming from private sector, which almost means to about $400 to $500 billion. And I think looking at the balance sheets of these infrastructure development companies, it is quite tough, because many of the companies today are stressed. And I don't know whether they are going to come out in the next 1 or 2 years. So it's going to be, so a lot of investment has to be from the government. If that has to happen, I think then in that case planned expenditure should not become a casualty, which means fiscal deficit. That means on revenue expenditure there has to be a curtailment.
I'll get to investment in just a bit, but Vijayalakshmi here, Mr. Devasthali alluded to the fact that there are stressed companies, and you know a thing or two about stressed companies in an environment like this. But would you say that, are you seeing any green shoots of recovery at all to get anywhere close to the 8% that we are all dreaming about?
It is too early to say that green shoots are there for the sake of recovery. You rightly said that stresses are visible in every segment, other than the retail segment or the personal consumption segment. We are all working hard, and of course the corporates are also deleveraging, and then they are trying to reduce their own debts. That is a very positive sign. But no one is talking of any investment. And the profit per se of all the corporates are actually hitting the bottom. Their margins are certainly under pressure. So these are difficult times, and we are not seeing any good days as of now. Though we are all very hopeful and desire that there should be investment cycle should come back and credit should pick up, and so that the cash flows of the corporates improve, and we tend to gain.
I'm going to toss this to Sajid. Sajid, while we're looking at 2014, let me rewind this to 6 years ago. We were all, we were feeling good. 9% was the norm and so on. Why did we screw up?
So I think the question should not be, will it be 8% growth? The question is, will it be sustainable growth? We've seen 9% growth before the crisis, which was sustainable. We've seen 9% growth after the crisis, which was not sustainable. What was the difference? The latter was consumption-led growth. The former was investment-led growth. In a fundamentally supply-constrained economy, the only kind of growth that's sustainable is investment-led. So the question should be, what are the 5 things the government has to do to jumpstart the private investment cycle? When that happens, even if you get to 8% growth 3 years from now, it'll be sustainable. If you have consumption-led growth, you're always choosing between growth and macro stability. Because if growth picks up because of consumption, guess what will happen? Inflation will rise with a lag of 3 quarters. The current account deficit will widen again. So I think the question has to be, what do you do? And to be fair, in all the doom and gloom of the last year, some important things have been done. Projects are getting cleared. Some of the building blocks are finally coming together. The question is, do we take that to its logical conclusion?
All right. I'm going to come to Mr. Contractor. Just before that, Chamara, you watch this part of the world and you watch India quite closely as well. While this might have been the reason behind why India finds itself lagging behind, do you think it's an opportunity lost? Has India really blown its chances?
Well, I think there are 2 pieces to this slowdown. Obviously, investment's the key to the growth. I think India is now finding itself in this a little bit of a vicious circle of slower growth, slower investment. So why the slower investment? Well, part of it, I would say, internal policy, and part of it is external. So, of course, what has happened this year is the Fed is signaling tapering. That's really hit investment appetite across emerging markets. So that's one thing, a bit of bad luck, if you would.
Sure.
But another aspect is the policy, and some of that is certainly there have been some pro-market policies from the government, but the investors have not been coming to meet those opportunities. Now, some of that could be it just takes some time. But I think we have elections coming up, and there's a lot of uncertainty. What will be the new government? What will be their priorities? And so people will say, "Well, sure, we're seeing good things happening. Foreign investors given more access.
Sure.
But we need to wait and see what the new policies will be."
If you look at 2014, are you relatively optimistic? Would you say glass half empty, half full?
I would say it's more than half full, because there are clearly some silver lining on the horizon. The first one being agriculture. Agriculture, which used to contribute just about under 2% to the GDP, they expected to go up to now about 4.5%, probably even 5%, depending on how the Rabi season plays out. So that has some implications on the inflation CPI also, which should help to temper CPI. The second is the growing exports, which is helping to reduce the current account deficit. The exports have picked up pretty smartly, and combined with the fact that the imports have come down because of the concerted government action on several fronts.
Sure.
The current account deficit is coming back under control. That's why you see the rupee settling at more or less fairly stable levels.
Sure.
So these are some of the good things, and then some of the policy initiatives which the government has taken in the last few months. Initiatives relating to FDI, initiatives relating to this subsidy, tackling the fuel subsidy and things. I think these have gone down well, and they should augur well for the months ahead. The only problem now is that we have this period of uncertainty leading to the elections, in which probably not too many serious decisions will be taken. So after this period of uncertainty ends, I'm sure we'll come to a stage where things will look a lot better than what they are now.
We will talk more about the state of economy in detail with Shraddha Rao of Yes Bank in just a bit from now. Time for a quick check on the markets. Priyanka standing by.
All right, starting out to be a little bit of a firm trade as far as markets are concerned. 45.50